Good morning, guys. How are we? Good morning. Alrighty. So let's have a bit of a peek at what's going on. Hey, Ivan. Okay. So,
Morning.
good morning. Morning, Marion. We've got a bit of. Let's have a look at the news real quick. So what I was reading just beforehand was, it looks like they're stepping back a little bit. So more cautious than expected military operation in Gaza. Looking like they're letting aid in. Russia also made a comment that they're ready for talks on a post-conflict settlement of the Ukraine crisis. Hey, Brett. Morning, Maron. So kind of like looking like they're stepping back a little bit. So we had a huge sell-off on Friday. We saw gold go crazy. Now gold is also pulled back a bit. I saw just before I checked, we're at 1997. So we've rallied a bit already for the day. Asian session was bullish. Euro session was bullish. We've got the time difference now, DLS, to consider if that's going to change like the volume, because at the moment what will have happened with this hour shift later is that it doesn't quite coincide with the Tokyo close again as nicely as it was happening. So there will be a little bit of a volume disbursements across. So we need to see like how that's really going to affect some things. What we have is we've got to be careful because we need to go back and have a look at what happened last Monday. Okay, so I'll go and have a look at that in the tick. What I wanted to do is also then talk about Euro news. We've got Spanish CPI at 8 o'clock, which is in 20 minutes. We've got German prelim CPI, so that's it says all day here. I'm going to try to see if I can find somewhere that actually has a bit more of an accurate time. Let's check FX Street, check Financial Juice as well. These times look like they're still in the New York times. Well, sorry, these times are a little bit off. Are they? 0030? No, that's right. Okay, so they're saying you've got German GDP. Is that on here? Oh yeah, orange folder at 9 o'clock. Okay, that's no problem. Then they're not really saying when this Eurozone is. What about this one? 19 minutes. So that'll be. Okay, so when it says all day here, I'm guessing that's meant to say 8 o'clock. So we're going to have a little bit of news coming in, coinciding with the London Open. And then this German GDP says at 10 o'clock, where this one here says it as 9 o'clock. So some silly buggers going on with this daylight saving shift. So we'll just see. We expect volatility anyway. The main thing is that there is news, and that's usually good for price to be a bit more consistent. When there is no news, price we know what happens then. We just get like all sorts of random headlines and things coming out. I was doing my weekend review, and I'm looking forward to seeing if we can have a dovish Bank of England and then seeing some positive data coming out of Australia. So this is the first piece, first domino to fall. This strong retail sales, stronger than forecast. So I think that's going to lead to fairly sound pound Aussie sales, Euro Aussie sales. Maybe not Aussie US too much. Aussie yen buys. I think that's a really good one. So really seeing like quite a bit of movement already with that news. So I hope some people were able to take advantage of that move. Pound Aussie was the standout. Just see it like it's already dropped over 100 pips from top to bottom. Nice one. Anyway, let's focus on a German. So I think it's going to be a bit of a risk off day. So, but we need to be careful because Asian session's already bullish, Euro session was already bullish, London session is already bullish. I wanted London to close above here and give us an indication where we can go. I'll talk about this candle in a wee tick. I thought maybe last week, I know last Monday seems all so long ago, but I was actually expecting to create a bit of a top wick on this day, and we saw Monday London session last week just absolutely dump. So I'm careful for these three candles being bullish, which is the same as what we've got so far. That these oh, we need to shift this time across as well, don't we? So now this is going to be on 0. There we go. Oh, my students, did you guys see that? So on the settings for Lux Algo, just keep everything the same. Just change this UTC to say 0 now, not +1. That's all you need to do. I'll put a screenshot like Joe suggested. Okay. The New York session is going to be 1 hour off just for this week. Oh, okay, Miran. Yeah, gotcha. Yeah, I can do that after. All right. So, what we typically see, let's just go back a bit. We'll just go back a little bit of data. Oh, now this is going to be a little bit off though, isn't it? Damn it. All right. Let's just talk about the 7:30 candle. So we'll just, because this is off at the moment because of the daylight savings shift, but try find the 7:30 candle. 7:30 candle. Okay, this one here. How this one closes, a lot of the time will dictate, because this is like the second half of the Frankfurt Open, that'll dictate a lot of the time where the London volume will initially push either to the next opposing level or to liquidity. So you see the 7:30 candle closes bullish, 8 o'clock candle pushes up, 7:30 candle, this one closes bullish, so it's not every time thing, of course. This one closes bullish, London volume kicks in, actually goes opposite this candle, but the hour candle is actually still closing bearish for this time. Okay, next day, 7:30 candle bearish, this is Monday, London volume followed that candle. Next day, 7:30 candle bullish, London volume continued that same direction up to the next opposing level. 7:30 candle, let me just move this. 7:30 candle, this one here, bearish, London volume initially pushed that same direction. 7:30 candle closes bearish, London volume initially pushes that direction. 7:30 candle closing bearish, London volume initially pushes that direction. So this is the thing, it's like, if we can try to predict how this candle is going to close, then it's actually not a bad idea trying to get in on this candle if you've got a fairly good read of where it's going to close, because if it's closing bullish, we would assume then that the London volume is going to continue that direction to your next opposing level. Today I was a little bit, it's already moved so much, and then if we go to the lower time frames, trying to predict like how this candle was going to close, we do have some reads on this one, so that's what I was saying. That's what this little line is here, that on the 30 minutes this is a little bit nondescript. It's like, obviously we've got a little support here, price pushes up, creates a resistance, and then it drops. I've got this green box quite wide because on the 1 hour time frame, it's my order block.
Wow.
See, like here, this is like, this is just lovely structure, support, resistance. This looks really nice. Now on the, let's go to 15 minutes. Okay, you can see this is like, doesn't really look like much at the moment still here. Go down to like, so the 10 minutes. 10 minutes now, what we're seeing is this is looking like a liquidity candle right over here. So for us to be able to get above and trade up to the top of this order block or structure, we've got to be careful that we do have like just a traditional sort of like support resistance along this line. But this whole candle, for us to get to the top of that wick, the first thing we need to do is close above that body, close above this bit. So that's where I had this, that's what this little dotted line is. It's a lower time frame LQC candle. Okay, we just needed to close above it. So the timing wasn't quite there for me to enter on this one. Well, I actually did enter. I entered early when I was setting up to anticipate price is going to push up to here, and then I didn't want to be distracted, so I've ended up closing this trade when I was like hesitating, because I think that this kind of trade, I'm unlikely to be able to hold it across London completely risk-free. I didn't want to be distracted going over London Monday morning with the stream actually on. If we go to the 5 minute, this is that same line. So as I was hesitating for like 20 odd minutes, I was like, oh yeah, I'm just had enough of this. I'm just gonna get the stream going and then not be distracted. Unfortunately, then when we were setting up to enter analysis, we finally did close above there, and then we've had that nice little continuation up to 14,740. Oh, so be it. Okay, so now that this 30 minutes closing bullish, well, it's good chance because the next 10 minutes this is going to close, and looks like we're pushing nice and steadily up. We do have another little bit of structure here that we need to deal with, okay, across here. So let's see what it does to that. I'm kind of hoping it kind of just pushes up, and then we can look to play maybe the rejection going down. But if it's a risk on day, you've got to be very careful doing any sells on this. I'm more keen for buys today. It's just when it's been pushing up like this, unless I was in the trade where I was like in the trade somewhere here, I'm not really sure what the price is going to do at the London Open. If we're just going to do a breakout straight long, I think that's probably the more likely case today. I would love to see it do a liquidity grab. Love to see that. Okay, so we've hit this first little area. These zones are just ones that I've had for pretty much all of last week. Just these are nice and sensitive zones. This one here, we discussed that last week. That zone. This one here, we can see that it's just been quite sensitive across the board. It's like, how does resistance, how does support, how does support, how does support, how does resistance, how does resistance. Then price started like closing a bit through it. So I'm not sure if I'm going to eventually remove this center one, but at the moment I've just left it to see what happens. Love to see it be able to pop up above here and continue that job, and then trade like that's another 50 pip range. I think we can do that quite a lot. So, but let's just see if we can get that liquidity grab before going up. On the 1 hour, we could have pullbacks all the way to this candle realistically before that move up. There's your imbalance. We've got the euro low, had a lot of volume there. We've got a gap over the weekend, and we've got the day has started with a H1 H2 doji. So we can easily see that come back at some stage, but maybe not today. That's pretty much it. That's how I see it. You know, we're just bullish with this risk. Like, so seems like a bit of a sentiment is we oversold, thinking anything can happen. That ground invasion has come. Everyone's sort of still just standing on the sidelines, watching, not really getting involved any further. If there's any sniff of people getting involved, then yeah, you know, just continue selling off. But if it's not, then this is a bit of an overreaction, and our price is pushing back up, so it makes sense to just be going for longs any chance we get for a long, price action wise. That's the direction we're going to go. Well, I'm going to go. All right, so there's some questions here. May I ask what indicator you're using to show Asian, London, New York? It is Sessions by Lux Algo. Really good one. This one, Sessions Lux Algo. Morning, Danny, as well, by the way. Yeah. What do you recommend if I want to start the world of ready for trading? GE40 is great. GE40 is excellent. Fixed time zone on both sides. Yeah, I know. I'll have to do that. I just don't want to do that right now. Would you mind taking a look at New Zealand yen? I've got a short there. No, I'm not going to look at that because you're going to get like a 2-minute analysis from me. That's not going to help anyone. Okay. Any questions, guys? Any? What do you guys reckon? You thinking the same thing?
No, just popped in just then. What were your thoughts? I'm looking at going long, I guess.
Yeah, I was long. I entered somewhere here earlier. Wanted price to close above here, but after it was like 5, 10, 15, 20 minutes with the start of the new 30-minute candle, I thought there was a potential that we might pull back a little bit. I don't want to be in a trade over London unless it's risk-free, because I'm unlikely to survive that. And after like 20 minutes, I just thought I'll just close for it was like 10 pips up. But now it's looking good. Wish I held it, but oh well. Bullish buy, first buy to sell to buy. Yeah, I think I'd love it to sell to buy. I'd really like to see London pull back, give us a price entry long to trade up to 14,790.
Yep. Right.
Also, just before we get, before the London Open starts, does everyone like the stream? Be super helpful.
Oh, I think we can do that.
Yeah.
Yeah, absolutely.
I notice it's crazy. You take one day off, as in like, because I couldn't stream Wednesday morning last week. That one day off, everything gets. You just see like it steadily increases. One day off, it's like this for ages, and then it starts to. It's crazy. Algorithms just can ya. So go with initial volume, buying very quickly, close the trade, wait for support to build in lower time frame. Yeah, I'm just because of the Monday, because we're already at this level. London's either going to do a straight pop up or a straight pop down, but I reckon it's probably more likely it's just going to do a straight push. But I'd love it to do a pullback first. That'd be really ideal. But I think if we're breaking, rejecting, and then breaking here a second time, and it's sort of like pushing, and it's not really hesitating too much, I think that's a fairly sound trade. 30 pips. But I'd love it to do a pullback first. But could take a breakout. I just wanted to clear this area. 30-minute, I'm going to say there's a huge chance now. I can't see this 30-minute candle closing bearish in the next 2.5 minutes. On the 1 hour is closing super bullish, but we could have a wick back down to say something like that. So even if it's a wick down to there or down to there would be quite nice. That'd be lovely. But we could see that initial pullback. And I think taking the first break I do think that first break can be quite hard. Unless there's like real clean traffic and price has been building, but price has already been moving. So London's now going to buy the high of the day. So that's already moved 120 pips. So for London to buy the high at 120 pips, for them to get their normal range, this is going to have to be a monster day, and that's very unlikely. So I'd say if London does push, then I'd say London might even then start to drift before going up again, because they'll want to get their fill. They won't buy the high without at least doing, they might push up and then come back, or they'll pull back then and then go up. Kind of like what we see here. Quite often there's a push and then a pullback. So let's go all chart view. You got no bottom wick on your terminal? Oh, I've got one on mine. Yeah, I've got a bottom wick. Just a little tiny little nipple. But it's only very small. So this 30 minutes just really pushed. And I really thought would have, the reason like I got out of that trade was thinking that it might create a bit of a bottom wick. Okay. 50 seconds.
Oh, still falling.
You think you were taught by my brother, Jackie? Who's my brother? Which brother? There's a danger brother, and then there's the other brother.
Which one's which?
Yeah. Oh, here we go. Straight push. Okay. So it gapped up. Just got to deal with this little green section. Something like that, if we can. That's a nice clean area, clean candles. Oh, it is. Yeah, Regan. Yeah, you were taught my brother. Nice to see you here. Yeah, that's not the danger brother, that's the good brother. Danger Dave's the other one. Alright, let's... Come on. TP 767. Yeah, that's an easy target. 767. Bit of volume needed to push up to for the next 30 pips. So something can, nice one, Marin. Congrats, buddy. Good move. Beautiful trade. Someone can wick down, breaking that high, can get that continuation. But if it doesn't give you that bottom wick, hard for that continuation. Spanish CPI, lower than expected, huh? That's good for indices, but Spanish news does not have a bigger effect as German news.
Bob's down at 93.
93, yeah, risk off. Sorry, I always get that confusing. Risk on environment today. Good, that's good. I didn't want it to pop up here just yet. I'd like it to leave liquidity for later. It's nice if it doesn't break that high. It doesn't do the liquidity grab from it, because when it does, it can pop. It's got to do a little pullback, unless you're taking the breakout. But you got to take profit quick on that breakout, because the second break's the better one. Because 137 pip day already. Very hard for London to get its full range. Oh, I need to change it for all of these, don't I? And for now, just to make this accurate, New York's kicking off at 12 just for this week. Then I have to change New York session. Alright, we're breaking up above here now. Let's go for 20 pips. See if we can push another 20. Second 5 minute 15. Yeah. Oh, Dave. Okay, let's get that support ready and then take the second break. Link's on its way, Dave. Yeah, so I can do the indicate changes to all. I think it might change all the indicators in all the different charts. Sometimes I haven't got the. Sometimes you've got some older indicators on here. Okay, come back, create that bottom wick. 5 minutes, looking like it's taken liquidity from above this zone.
15-minute fair value gap got filled.
Yeah, it's having its reaction now. Let's see if it's enough to have a decent pullback or create a support, and then start making its way back up to retest this high and beyond. 1 minute manipulation was there? Or doji, or LQC. No bottom wick. Yeah, it's nice to have that little manipulation. Breaking that manipulation, got an easy run and back up. Needs to break it though. What's this? S&P, NAS, US 30 oversold. Nothing adverse over the weekend regarding Israel, Hamas, or Ukraine, Russia. Such risk off should expect bullish openings. Yeah, and that's what we saw. We saw bullishness to start the week. But once you've had too much bullishness, you can't continue going up in a straight line. It needs to go in waves. So we need to pull back, we need to create support, and we need to see continuing bullish pressure. Come on, break this high so you can continue up a bit more. No bottom wick here, bit of a danger, but a wick down, breaking the high to retest this high. Then we can get that wick fill. Little gap up. Okay, break this high, keep going, blast.
Go, go, go.
Yeah, come on. Ooh. Rejecting the second time.
That's having a nice pullback.
Last 2 minutes of the 15. Hesitating so much. Okay, now's the time. Yeah, breaking that high. Very good. Yeah, in the clear. Beautiful. All right, don't let it hurt your feelings now. This cannot be a losing trade. We're getting close to this little danger area up here now. So nice one. Who took this one? Let's put it in the chat. Who took the longs? Brett, you got it. Todd, awesome, mate. Good to see you, mate. Very small, Tom. How come small? You were waiting for the retest, Maron, but you got in the you're in the earlier trade as well. Samir, you got it. Awesome. Oh, it's starting the proper Val again. No problem. Sarah, you're in. Al, not today. You're concerned about the lack of bottom wick. Yeah, there's just so much volume in this one. LN, you got it. You got the W. Awesome. Smallest account. Yeah. All good, Tom, mate. Jordan. From Atlanta. Nice one, mate. Good to see you here. Quick scalp. Yeah, it was a quick one. We'll discuss the moves of German in the tick. And like our typical volume, like the moves for German, usually it's like 7:30 a.m. UK. This is in UK time. In UK time, I'll just make this a little bit bigger so we can Okay, in UK time. A lot of the time, 7:30 a.m. is the rangefinder, as in like, or maybe I'm not the best word for it. Key piece of information, let's say it that way. Key piece of info. 8 a.m. often, not always. But often, most of the time, will follow the 7:30 a.m. candle to the next opposing level. Between 8:30 to 9:30, either continuation with heavy volume or the reversal going from liquidity to liquidity. So i.e. if 7:30 a.m. closing bullish, 8 a.m. will often follow that bullishness to the next opposing level, looking to the left, found on like your 30-minute time frame, 1 hour time frame, somewhere between 8:30 to 9:30, we'll get a correction. And a lot of the time it's at 8:45 when I go get a coffee. That's usually the signal that we get a continuation. A reversal, going from liquidity to liquidity. A lot of the time it's good for 50 pips. Then volume dies down, vol dies down until about 10:30 a.m. 10:30 a.m. volume starts picking up. Manipulation likely over, steady moves until NY. And that's very often the case, how German moves. And you get some manipulations in this, like 8 a.m. to 8:20. You usually get like a good 20-30 move, 20 to 30 pip move, but then price will often pull back, go to better liquidity grab, and then you can have that continuation. Before then it moves and does like a 50 pip reversal, and then it can settle down for a bit and either keep going to the continuation to the downside after having picked up liquidity, or it's just done the pullback and then we get the continuation. But quite often from 10:30, let me just move that back so you guys have that. Often from that 10:30 to 11, beautiful. Take profit, guys. Take profit here. Leave a runner. That's so looking at the 30-minute chart, often from this, like, oh, the times are going to be a bit shifted across again because of the daylight savings, but say from like 10:30 11ish, we normally get nice continuation 30-minute candles, nice continuation 30-minute candles, nice continuation 30-minute candles, nice continuation, not really so much here. This one, nice continuation 30-minute candles, so on, so on, so on. That's really the recipe for German 40. Just trying to understand where you get your key information. If you can get early in this 7:30 a.m. candle and see like the price action that plays out, so you can actually get in early, then you can get a really excellent price. But most of the time, early entries aren't necessary. You can just wait to see what time that closes. And a lot of the time, London will do a pullback right at the open, grab liquidity, and then keep on going. So yeah, it's in a nutshell. Rob, all taken 3 longs from Euro plus 4%. Nice, mate. Where are you now? Oh, you can take that son to the airport. Chris, awesome, mate. Thanks for being here. Drive safe. Is my strategy support resistance? Liquidity. Let's call it liquidity. Liquidity with zones. Spain today. Holy, mate. Nice. Please, what asset charts do you have displayed? What time frames? Oh, can you see it in the center? Quite faint. German 40, 30-minute. That was a 30-minute chart. But look at all time frames. All time frames are important. You keep on going up to Manchester, Sarah, or are you staying in Manchester? Been here all weekend? Yeah, not quite the same as Spain, is it? Can this also be applied to German 30? German 30, German 40, exact same thing. It just depends if your broker is updated to say German 40. But it's the exact same thing. About 2.5 years ago, the DAX increased the top 30 companies listed to top 40. Yeah. Traveling home today. Drive safe. Back down. Yeah, nice spot to take in profit. I bet there's probably some cowboys in sales now. It makes sense. Oh, Joe Dispenza today, this weekend was it? How was it? Mind all fortified now. Fabulous. Yeah, I heard he's good. Oh, and I received a gift from a lot of you lot. Thanks so much. It was amazing. Such a nice surprise. It was sitting with security for a few days. Because I had no idea, and like they don't leave a little slip to tell me that something's come. They didn't get back to me, but man, my partner absolutely loved it. We got it right. It's right next to me, so we'll get some. She wasn't in a very good mood the last couple of days. The baby, not the partner, or the partner as well, but getting some nice photos was pretty difficult. Then we had some friends over yesterday, but absolutely loved the gift. It was so thoughtful. It's literally the nicest baby stuff we've received from anyone. Because we only especially a little brush. I think that's one of my partner Sarah's favorite things is a little brush with a name on it. Because we've got like a little crappy plastic hairbrush. So nice. Am I in London or Manchester? Used to be in London. Now I'm in Leeds. So in the middle. No, not quite the middle, but near the middle.
Yeah.
All right. So how much was that little pullback? Nearly 30 pips. Oh, see you, Todd. Yeah, I mean, that's all you need to do, right? Just one trade, really. Today was a nice, simple one. Going for London high? Yeah. Well, we've got liquidity here at New York high. And I reckon we probably take that New York high, but we've got London high right in front. So I would say I don't really want to take longs anymore. That was my goal. I want to take longs, but I don't want to take longs up here. I think it really needs to pull back now, because with that move just now, with the London Open pushed up 56 pips, and that's not much for London. Like we would expect like 120 pips of movement, but we've got to consider that 50-60 pips in the scheme of the whole day. We don't normally have Asian session and a Euro session that's as one-sided. So this daily candle is already 170 pips in size. So for London to get, like, say London wants to move anywhere between, like, let's just say on average 100 pips, 100 to 120 pips, it could push up 50, like say 60. Then price could come down, say like 80, and then price could go up like 100 from there. And that way, like, London high, New York highs right here, London highs right here. But for London to get a better move, they know there's going to be breakout traders ready to take the break of the New York high, because that's a previous daily candle high. So there will be a lot of orders sitting up here, liquidity. And price could easily just sweep liquidity and then push back down, because there was leftover liquidity along this line. So you've got trend line liquidity. We've got a little gap in price that happened with the London Open. So we can easily retest the London low. We've got no wick candles down, maybe not on the 5-minute chart. Along here they had some no wick candles. So I can easily see price do a little reversal because price, there's so much liquidity here, and we know the whole edge of this strategy is price will go from liquidity to liquidity. So once enough liquidity has been picked up one-sided, they're going to have their fill, and then they'll go from the other side of liquidity, which will be, you know, somewhere that's below price. Sorry if I missed it, but what's driving this bullish sentiment? The pretty much war news, a flight to safety from that we saw on Friday. Oh no, sorry, that's the daily high, not the New York. New York last week wasn't the daily high. The flight for safety we saw late in the session. We saw gold really just rally like 250 pips up to 2010, and at the same time we're seeing equities sell off, and that was because it started with reports Israel cut off communications in Gaza, which was what started before they did the ground invasion. And then, you know, with the ground invasion, what's going to happen is other countries going to get involved? Is there going to be like war spilling over the boundaries? It was so everything, like, it was really risk off environment. All money went to somewhere that said, like, I just want to keep my money safe. Now that nothing escalated and that Israel finished, well, it looked like they finished, not finished total, but they've at least they've said, you know, let the humanitarians in to give aid. Other countries are sort of sitting back. Russia said that they opened the talks about resolving conflict. That opens the door for money to flow back into growth assets. So we see an overcorrection. Plus, it just makes sense as well from a weekly point of view. It doesn't make sense for price to keep on going just one way traffic without having some sort of pullbacks. And this is the right, you know, kind of mix of sentiment news to, yeah, you know what, it doesn't look like the world's going to end today. So money flows from safe haven assets back to growth assets. I feel bad making money on gold on Friday with the news. It's just trading. We need to it's by far manipulated, so you might as well get you a little piece. Yeah, there's nothing we can do about it really, apart from trade what's in front of us. Yeah, I mean, if there's more people to do a meetup, for sure, you know, I'm down for a meetup. When I'm in Australia, I'll do a meetup. When I'm in London or Manchester. So yeah, lovely, cool. Well, then that was the nice easy move for the day. Well, for the open. So our job is really done. Now we can just plan the next move. But this one here is all sorted. Can we? I don't feel comfortable selling either though now, but I would imagine that sales are coming in. We've got a little resistance candle. This is the 3-minute chart resistance candle, and this is looking like a rejection wick. So closing below support, we're going to see, oh, there's that no wick candle. So we should at least come down to this area to feel this imbalance. You just scalp the sell, Tom? Yeah, it made sense. Resistance, price overextended, got rejection wick, resistance candle. I'll zoom in so you can see it real close. Resistance candle, followed by doji, rejection wick, anticipation entry, confirmation entry, when would have been nice if this one wicked up and then flipped for confirmation entry, as this one sort of gapped up but pushing down. That makes sense. It makes sense. Be careful with this area because it is heavy volume. Taking the second break under here, you've got an easy 20 pip to the downside. Well, maybe not 20, quite 20 pips, but a good move down as well. All right. Well, I'll put a little reminder. So if you guys like it as well, make sure to give my channel a follow because I'm on there more days than I'm with Trading Nut. Okay. So that's for Trading Nut channel, because I'm going to end that stream pretty soon. We've done an hour. We've got the London Open I'll continue on with my channel for a bit longer, and my students, my Zoom peeps, so we can discuss this move and ask any questions from the study session on the weekend. Did everyone understand this buy? Did you understand the reason why this is a good area for a reaction? Oh, that's all right, Sarah. You're busy. It's recorded. It's up there for you. It's a very small thumbnail, Tom. Can't expand on the win too much, but nice anticipation entry. No, sorry, it's not anticipation. It's like anticipation / confirmation, kind of 2/3, isn't it? Rejection wick, liquidity. This don't want to enter this one because this one's bullish, but break in the high and then flip in bearish. Makes sense to take a sell. Did you leave a runner? You should have left a runner because this is a great resistance. If you have, that's good. This is very quick. This is micro scalping, hyper scalping. But you've got that no wick 30-minute candle. That's definitely the target. 3-minute candle. That's definitely the target for price to push down to. I think we just hit it actually. Not quite, but we're coming down to that area. So nice. Yeah. Thandy, just search Haydos FX on YouTube. It'll come up. Okay. 2 more pips. We're taking that imbalance. Yeah, beautiful. Lovely move. Cool. All right, guys. You're very welcome. All right, Trading Nut channel. Hope you guys have a lovely rest of your day. And I think I'm here tomorrow, so I'll see you guys tomorrow on that one. Take care. Alright, that's just my channel now. My channel, my Zoom people. No one's answering my question, guys. Come on. Did you do you fully understand the reason for the longs?
Yeah, I understood them, but I didn't get them, mate.
Sure. Did you take
I
the
got
sells?
the sell there.
Yeah,
I got the sell.
that's your style.
I got the longs and I had the positions marked before, so it was good.
Oh, good one, Dave. Awesome.
I got stuck in something between 5:30 and 6, so I didn't know I was going to make it. But bingo, just in time.
Good one. So it's so important to get the to do that, like your warm up, isn't it?
Yeah.
Like you can rush it. You can rush the analysis and then just pick, like, use what are your high quality pieces of information, and that's how the second 30-minute of the Frankfurt Open closes. But then you kind of rush in your zones, aren't you? So even though you can say, like, well, 30 minutes closing bullish, there's a good chance London's going to continue that bullish pressure. You're going to look to the left, and you're going to look to the left and then be like, damn it, which one should I trust? This high? Should I trust this high? Should I trust, like, some nondescript area that maybe is sort of traffic in between? And you're not going to have time to really look in the lower time frames at these wicks, or like, is this a true resistance created? You're going to have to really rush that, and that's when your targets are not well defined. Even though you know that you've got a high quality piece of information for initial direction for, like, say 20 pips, 30 pips, but then your zones aren't well done. But get in there early, say 20-30 minutes before you're looking to take the trade. Just go, well, it might take longer initially, but get in there early enough time so you're not feeling like you're rushed or stressed, to really give some time to your zones. Then you're kind of set then for, even if you want to go with the initial momentum push or want to take the reversal, because London, we know this candle's coming. It's just where is it going to come from? What time frame for the 7:30 candle? Yeah, the 30-minute Marion, 7:30 to 8 a.m. UK time. So that will be currently Queensland will be 5:30 p.m. to 6 p.m. That one's a crucial piece of information, because if that's closing healthy bullish, and say your opposing level or your zone is like up here, London will usually go up to that move. We just need to anticipate the wick, whether it's going to be a wick or how deep that wick could go. But if you can't get in on the wick on the lower time frame by like saying, if we correctly picked the direction, but we're just trying to now to pick where the low of the wick is going to be, that's where the lower time frames come in handy. Or looking at like how this 30-minute candle was formed, and where was liquidity left behind. That's the first way of trying to pick how low this wick will go. Or look for price to start showing rejection wicks, stalling, creating resistance on the lower time frames, and then having candles closing above it, pushing back up. Then you know maybe the bottom wick is in. Or if it does one break, we know that then the second break. Say you just want to avoid trading the side of the wick completely, and you just want to take this part, the second break will often give you that move. And of course, we're going to have weeks where price actions, shit, super shit. Like, or I'm tired and I make silly mistakes. I can't blame the charts, because we know the price action, there's usually 2 or 3 excellent moves every day on German 40. It's just whether we took it. If the chart doesn't give that initial move and it's just like ranging and giving like low quality moves, then we know that there's something, they're waiting for something, and maybe like we've got the first move is usually the initial push. Second move is the correction. Sometimes, let's just say on a typical day, there'll be an initial push, there'll be the correction back to high quality liquidity, and then we see the bigger move of the session. That's the typical day. Then we have the atypical day, or maybe it's typical day type 2. Typical day 2. We have initial liquidity grab, then we have the volume push, then we have the correction, 30 to 50 pips, then we have continuation. So that would be, you guys can you guys visualize that now after watching it, like even just like 2 weeks of German 40? Can you see like how you get a typical day where it will do the push, the little correction, and then the bigger move? Or like obviously on a larger time scale, we've got the initial push, bigger correction, and then price might grab liquidity and then do the bigger move. That would be like a typical day. Then you've got type 2, where you do the initial liquidity grab like this, then we get the correction, or sorry, liquidity grab might do something opposite, then you get the volume push, then you get the correction, and then after a while you get that continuation. Will we fill the gap below before going up? I just think that there's not enough range for it to continue going up in this London session. So I think London session has done the liquidity grab, and it makes sense for them to go and pick up liquidity from somewhere else, because we already moved so high. Oh, you mean this gap here, price gap?
Yeah, that one below, yeah.
I don't know, there's 100 pips for it to get there. 109 pips, there's so many things along the way. Plus we've got news in 15 minutes as well. So what have we done? We've got the news coming out soon. German prelim GDP. In 15 minutes, that might tell the story. If that's well, bad numbers would indicate struggling economy, but maybe ECB to be more dovish. So I find maybe bad numbers, we might get chopped. I think good numbers will fill the gap. Yeah, I think if we get really good numbers, is it plus 0.3%, we'll probably fill this gap. If we get flat or bad numbers, I think we might get range. It's coffee time though, I think. Leaving a runner on with all my bias. Oh, you're leaving a runner with bias trades, and it's teaching me a lot about what I've not been doing for 2 years. Sorry, what do you mean, Jim? So you're trusting your analysis more?
Sorry, yeah, I was closing trades way too early, so I'm still I'm taking 80%, then I'm just leaving them, and it frequently when I've been closing them at say 1 or maybe 2 to 1, they go to 3, 4 to 1.
Yeah.
It's just I'm not leaving them, still not leaving them long enough, but it's teaching me definitely that I need to be leaving them, so I'm leaving them more.
Yeah. Risk reward is on our favor with this strategy.
Yeah, I mean, I'm in a cell now.
Beautiful.
And I'm just leaving it to run, to take out all the liquidity on the left.
Yeah, that'd be nice, huh?
I've taken an 80%, then I took a 50%, and then the rest I'll just keep going. It's a really small amount, but it's just more of a lesson to yourself doing that. And I know that's a bit of advice you and Akshay have both given in your time. So
it takes time. It takes time. So
yeah, it does. It really does.
Yeah. Like you think you understand something and you get it, and then you're like, wait, now I get it. And then you think like later on again, wait, now I get it.
Yeah.
I thought I got it all that time ago.
I think the difference between I get it and I know it, I can't do it.
Yeah.
So it's teaching me to actually do it.
Yeah, that's what Alan says as well. You know, set forget is his favorite one. Say.
Yeah, I mean, actually, what I should do is I should just switch it off and walk away.
Yeah. Once you got your zones right, and you've it takes time to get them right, and you still, there's always that lingering doubt. Do I have it right?
Yeah.
Then, but where the zone should happen, where the price action, it should tell you where once liquidity has been picked up, there's no reason for it to go up there again without it going to say from point A to point B. It's just about trying to accurately pick where those point A, point B, point C are going to be for price to, move up. As soon as we move stops to break even, then it increases your probability, because now your stop loss is not above liquidity. It's now, once price has been at between a certain point, price can easily just stay here before it continues.
Yeah.
So as soon as we move our stop loss down, that little bastard will get us.
I think the big thing for me is to draw these. I mean, I'm drawing these support and resistance areas that you've got on your chart. I'm doing them before you start in the morning and comparing them to what you've got.
Yeah, that's good practice.
That's really good practice.
Yeah. I mean, I think it's important. My zones are pretty accurate, but they're not every zone. I still miss things. So I think people still need to trust themselves. And if you see something that I don't have, it's not that you've done the wrong thing. I easily could have missed it, and our eyes are different. We might, training your eyes is a huge part of trading, and I cannot see everything. I can have a pretty good idea, but if you have something that's not on here, don't try to say, oh, I'm not seeing the things that I need to see, because your zone could be perfectly valid, and it doesn't have to hold the first time as well. That's important. It's because we know that once you have a zone, say I had a zone here and price just obliterated it, don't delete it, because see if it holds as a resistance. Because if your eyes picked up on it, you usually your eyes, price doesn't have to respect it the first time, but let it. If it's just chopping through it, then you can say, well, that zone means absolutely nothing. But if it breaks it, you know, it could always hold as a resistance or other side. All right, I'm gonna go grab a coffee, guys. So I'll be back in a few minutes.
The person you is not.
I'm heading home now. Yes. Well, depends what's there. I'm not necessarily that
You're
hungry
not
and
on
stuff.
mute.
That's okay. Milkshake will be fine. Okay, I'll see you soon. Okay, bye.
You're not on mute. Good to know he's heading off home.
Yeah. I'm only being quiet because my youngest boy is in bed and I'm in a hotel.
Alrighty. Yeah, news soon. News in 5 minutes. Let's watch the news. So, to illustrate that point what I was saying about like typical day as well, while I got you here, let's bring up this just to sort of like give you a bit of context as well. So if we look at say GE40 and look at like volume, okay, volume and like volatility, okay, so you can see like on a typical day what we get is we get initial, like you see like normally not a whole lot happens in Asian session. Normally you see like the size of it, like it's actually quite small. How many, I'm not sure what trading volumes, where they get that data from. I wouldn't rely on that, but you can see like how we get the sort of moves. 7 o'clock is when we start getting like from the Asian session for the start of the day. 7 is when we start getting that initial little push. Then 8 o'clock with the London Open, we get a nice little spike, and then it starts to decline for a little bit, and then it starts to pick up again, leading into New York Stock Exchange, and then it starts to die off again. And this is a typical pattern that it will follow. So we're trying to pick the move that's really coming from this one, and then we can get the reversal. And like trading this time of day, I think it's a nice, healthy movement. I don't think it's like, it can be fast if you're not used to it, but I think you can easily get used to it. Once New York Stock Exchange opens, with like say the US indices, it's wild, really, really wild. But this is like a nice, healthy movement. And if it sort of opens and you miss that move, and then the ranges or zones aren't really that clear, and then we see price just like range, because often, you know, we see a price range from like 9 to 9:30ish, where it's like doing that kind of counter trend move, little correction. And then we start getting that steady moves from like 10:30 onwards. If it's ranging in this time, don't force your hand. Just say like, well, I don't see it. I missed the first move. I'm a little bit frustrated. I spent all this time here. I've got nothing to show for my time. And then price is not really giving it to you, and it's just going sideways. Take a couple hours off. Come back around like 10:30, 11. Wait for, instead of looking at the low time frames, like 5s and 3 minutes, start looking at the 15-30 minute time frame from 10 onwards, and wait for like that kind of higher quality correction move or continuation move. But look for these candles to show you the direction, because then we know quite regularly there's a good move leading into New York. Doesn't mean you need to stay up all night trading, waiting for New York Stock Exchange, because volume is picking up until then. It's about timing your moves, time the market and time in the market. Very, very, very important things. See like how the volatility sort of picks up as well. We get good volatility, almost the same sort of volatility as New York session. So we get good pips, but actual volume being moved. It takes more volume to move volume, if that makes sense. So London is good volume, but it's coming after a time of relatively low volume. So the move is just as good as, or not quite as good, but pretty close to when New York session's opening. But New York session, you need so much more volume to move the London volume around. So you get like the volatility is almost the same, but volume, it takes a lot more to move the same volatility from London. So we get great moves here, and that's what we're trying to pick. Then as it decreases, slows down, don't force your hand if you're not seeing anything. I'm guilty of that as well. When I know I've got a time of, like, if I've got to be done by 9:30 today or a day, I can force a trade, and that's usually the bad trades. So trying to avoid those bad trades and picking like what our A plus setups are. If we can get it straight away, you've got an early mark. If you can't, means don't force it. No, there's 2 or 3 good trades in this London session. Just move on to the next good one. Plan it, trade it. Make sense? Simple stuff. Not really. Easy in theory. But good that we've got, like, you know, the community. I think everyone's really encouraging here. You guys are pretty quiet today, though. I do say that. You guys are quiet this morning.
Hayden, can I ask a question?
Yeah, mate.
If you go on a 3 minute and you go to, say, 7:18 this morning, it's just an example.
This one.
Yeah. So if you zoom in on that, it's not quite taken out the doji 2 candles before.
This one, yeah.
Yeah, and there must be liquidity underneath that doji. Or there probably is liquidity underneath that doji. Why does it, when it gets that close to taking liquidity and doesn't, is there a reason? I mean, it's quite strong, that move, so it suggests it's going to go in the, you know, it's going to carry on going up, and it hasn't grabbed that liquidity. But do you know if there's a reason that it, you know, it gets so close but doesn't do it? And that's on TradingView and on Terminal.
I think it's just liquidity left behind. So
Leaving.
at this time, you've got to take it, like, this is the 15-minute candle. That's the 15-minute candle. 1, 2, 3, 4. Oh, sorry, that's the 15-minute candle. So the 15-minute candle, for most of it, for the first 3 minutes, pulled down, and then it was looking hella bearish, and then it's moving bullish, and then it's pushing up, and then it's like breaking its high, and the last 3 minutes closes like this. Next 3 minutes wicks down a little bit, and then does the wick fill, and then starts pushing up, because that's the last 3 minutes of the 15-minute candle.
Yeah.
And I think it's just like, if we know that there's a down move coming, the market will leave these little inefficiencies. So it'll leave liquidity untaken, because this will be all the areas for price to, you know, this is looking like lovely liquidity to be swept at a later date.
Yeah.
Because they don't want to, like, often they don't want to price push down. If this is leaving a doji, what we'd normally think of a doji is, or like, if this is because this is a rejection wick as well. So price is pushed down and then buyers stepped in here, price pushed up. And if that was an institutional buy pushed in because this is a rejection wick, as they bring it down, they don't really want to, like, come back to the entry again. So it looked like when you've got this no wick candle, a bearish candle with no bottom wick, that's not an imbalance. That's like price just ran into a brick wall. So it just closed. It just closed there because there was obviously, like, that's where it stopped. Price wicked down just a tiny bit, then pushed bullish. It didn't need to take this liquidity.
Yeah, I didn't actually see that as a rejection candle, but it is actually, isn't it?
Yeah.
That doji is also a rejection wick. Yeah.
Look where it stopped. The lower time frame liquidity wick, the one I wanted it to close above to give the upside. That was on the 10 minutes. So price, that was this body over here. This body of this candle. Because that's the liquidity rejection wick. Price came all the way back down to that line. It's been there, you know, all session. Nice. Very nice. Alright, so that was the news push, this 5 minute candle that opened with a little... How much did that move? 17 pips. What was the news? Flat. Let's see if the media is stoking anything. So you see how all these are like where do all these headlines come from? So what are they saying? We'll have to stay at the peak for the next few quarters. Bets on rate cuts happening already in the first half. Tiling displays. Yeah, this is nothing new. Of course they're going to say that. Stop blaming Iran for Hamas attacks on Israel. Who says that? Oh, Iran says that. You know who's the loser in all of this? Truth. You're never sure like who says what. Everyone's got their own agenda. Current restricted rates are likely sufficient in December. Oh, okay, this is new. They're saying these kind of news. I need to figure out exactly who Simkiss is, but saying that they're not going to cut rates, but they're unlikely to hike rates as well. So that would be more bullish. See a soft landing as a key scenario for the Eurozone. That'd be ideal. That would be ideal. Forces are deployed along the northern border. We are prepared for any scenario. Okay, so that's the border with Lebanon, isn't it? Okay, all right. Media's still got to wake up a little bit more. I'd say this would be bullish though. So those headlines, like those statements, Simkus, this one. Current restrictive rates are likely sufficient in December, saying the December hike, unlikely. Well, 842. 842. Okay, initial push down, create the support, start pushing up. Then that news, the flat news from if we had good news, really strong GDP from Germany, I'd say we go down. Because that would say we need to slow the economy. Maybe we need to be more restrictive. But if we're flat, price likely to keep on going up. Alrighty. Alright, well, I'm going to end the YouTube. And then my Zoom people just stay on. So thanks guys. My camera blurry? Looks like it's very blurry. Anyway, I'll see you guys tomorrow for YouTube. Catch ya.